In this video, guys, we're going to look at 7 key lessons from the stock market wizards. Stay tuned. Hey guys, warm welcome to you. Alright, so Stock Market Wizards, I've got a paperback version here. I've also got a hardback somewhere. I don't know where I've got this paperback version from, but I do have it. Stock Market Wizards, one of the series from the Market Wizards, one of the books, should I say, from the Market Wizards series by Jack Schwager. The most recent one is Hedge Fund Market Wizards. They are all well worth buying, whether they're in book format or an Audible format, whatever. They are all worth getting. Every single one of them, great lessons from many good traders in there. Okay, but this one, the Stock Market Wizards one, is really focused on people who are involved, obviously, in the stock market. So I think it's number 3 in the series. I might be wrong. There was an original one, there was a new one, stock market one. There's been quite a few out there, but this is the Stock Market Wizards. So 7 key lessons from these ones. So the first thing, guys, is that to find your own method. There's no one specific single way. In other words, every trader in this book and in all the Market Wizards books all have their own strategy, style, flavor, approach, time frame, everything. You might have a scalper, you might have a longer term trader, you might have a swing trader, you might have a load of swing traders who are all trading different setups, different markets, different strategies, trend following, mean reversion, you name it. So the point is it's finding your own path, your own way, your own method, and not copying someone else. Now, by all means, take inspiration from others, as the whole point of us buying these books and you watching YouTube videos and me watching YouTube videos and me going on courses and me picking up programs and me picking up books and me audios. You know, we all learn little bits that we add to our own trading. That's the point. We make our own recipe, we add bits that we want from other traders. There's no one single way. We can get inspiration, but ultimately we've got to find our own little path. Number 2, discipline is the one thing that is a common trait amongst every single successful trader, and we know that already, right? If you've been here for a while, you know that that's the game. If you've been trading for a while, you know that that's the ultimate game. Discipline, mindset, control of your emotions, and understanding and harnessing your emotions and that kind of stuff. So discipline, regardless whether you're a scalper, swing trader, trading forex, is just something they have to have. So if you're any in doubt, there's no long-term successful trader who hasn't got discipline. You might have a short-term successful trader, got a bit lucky, but for long-term success, you need to have that. Number 3, guys, leverage on a style that suits your personality. Something talked about before, but interesting that it's a common theme through the Stock Market Wizards. They say, listen, if you like to trade short-term price action, day trading, then stick with that. If that's your personality and style, stick with that. Prefer to take more time and calculate your decisions and maybe do some fundamental analysis, maybe do some this and that, some swinger trading, some longer term trading, and focus on that. Don't try and force something onto you that you know you're not going to enjoy or not going to want to do. And you're a very successful swing trader. It's probably a little bit longer term than a swing trader, but swing trader to investor. And he would have absolutely, even openly admitted, said, I would hate day trading. I'd absolutely hate it. I'd suck at it. I'd be rubbish. But very successful swing trader. And he recognized that that was his skill set. And he didn't even want to be in front of the screens day trading. So there's that. Number 4, resilience and failure. So failure is going to be part of it. You're going to hit drawdown setbacks, fail at some point, maybe catastrophically, hopefully not too bad, but you're going to have to pick yourself up many times. Now that might be from quite a disaster in your account, or it might well be from a string of bad trades, a string of losing days, a string of losing weeks, a string of losing months even. You're going to have to accept it and move on. And so it's where resilience comes in. Every single trader in this book has shown that they have got the ability to keep moving forward, have the resilience to get back up and press on. Number 5, be flexible. So being careful how we take this, but be flexible as in, okay, sometimes you're going to have to adapt. I've told the story, guys, about how I was very actively trading on the London Stock Exchange, mining shares specifically. Then I had to be flexible and adapt and adjust to futures, Dow, YM, crude oil, trading those, DAX, transitioned, adjusted, changed my time frame, changed the way I approached the market, changed the way that the instrument I was trading, and this is probably going to happen for the next 20, 30, 40 years. And you know, this is what all good traders do as well. You notice a lot of traders will be focused on something that's working, and then when it doesn't work as well, they will shift. And that might be a big shift in the markets they're trading. It might just be a shift in the strategy they're trading, the time frame they're trading, the approach, all these things. Always that flexibility to see, hey, it's not working as well as it was, let me shift there. That was a little bit of a sweet spot. It was an opportunity, it was working well. Where else can I go now? Where's the opportunity? Trader following the opportunity, not being wedded to one specific style, one specific market forever. By all means, if it's working for you, stick to it. But when you recognize you've got to be flexible, that's when you've got to be flexible. Number 6, be in the game for the long haul. Trading takes a long time, guys. It's not something you're going to pick up in a few months. It's something that you're going to have to work at for many years. You know, and that's the thing with the commonality with the traders, is that they've been in the game for a long period of time, but they recognize that they have to be in the game for a long period of time. And it comes back to the point of risk as well. You know, if you're risking so much money, you've got so much money that you're allocated to trading and you're risking it, too much of it, you're going to wipe out. You're not going to give yourself the time to learn to become the good trader. So knowing you're in it for the long haul means that, hey, yes, you may have allocated a reasonable amount of capital to your trading account, but the fact that you're then risking a small amount means that you can trade for longer, as opposed to risking a larger amounts means you're potentially going to wipe out and have to refresh it. And if you haven't got to refresh it, that's the end of the game, end of the career. So understanding that and always having in the back of your mind of, okay, and one final thing on that kind of point is that you have a losing day, a losing week, a losing trade. Put it in perspective. It's one of however many trades you're doing. It's an irrelevance. It might be damaging, it might be hurting, but if you look at it in the bigger picture, does it bear significance? Probably not. Even some of the great traders in this book and other books talk about some catastrophic losses they've had. Haven't not affected them, they've learnt from them. Yes, it might have set them back a bit and they've had to kind of dig themselves out of a hole, but almost without fail, or without exception, should I say, all of them say it was a good thing that happened to me, because I was trading incorrectly, I wasn't trading well, it was overdue, and I learned so much from it that even though it was wasted trying to get that loss back, I learned so much from that period. So, there's understanding that. And the final thing, guys, is keep great records. And this is about market observations, as well as keeping great records about your trades and your journaling and stuff. So, understanding what you're seeing in the market. Say, I've seen that before. Is that something I can put away and nurture into a setup or a strategy? Or is it something that is just very short term? I've seen that before. Okay, well, how can I use that to my advantage? How can I use my kind of skills to look and write these observations down and go, well, actually look at this. I've observed that many times on a Friday afternoon after non-farm payrolls or whatever it may be. This happens. What's the setup from that? Do the setup, then you're ahead of the game. You're one step ahead of everyone else because you're observing it in the trenches, on the front line, so to speak, seeing it happening and then developing strategies from that. And that, okay, what an extreme version saying developing strategies, it could be just tweaking the way you approach the market, long, short, where your stops are, what your risk is. But keeping logs on market observations is something that a lot of these guys say to do, as well as obviously journaling as well. But that was more based on the observations of the market. All right, guys, those 7 key lessons from the stock market wizards. Like I say, I'll recommend this book. Hardback, paperback, Audible, whatever version you prefer. Stock Market Wizards, interviews with America's top stock traders, and by Jack D. Schwager. 7 lessons. Take care. Bye-bye.